Hello traders, welcome here on our YouTube channel. Welcome to our new video. As you know, there was no webinar on this Monday. As you know, we have a webinar each Monday. I was away. I had a pretty good time with my family and friends. I was on Mallorca. So if you're German, then you know that there are a lot of Germans, and I'm sure that you maybe already visited it, and it's a very beautiful place. A lot of beautiful beaches, also very affordable prices. So if you have a chance, make sure to go there, because I'm sure that you will have a very good time, especially now when it's still maybe not too crowded. Well, now it's already start of June, it's a little bit different, but maybe 1 2 weeks back it was very nice actually to be there. So I was away, but I also had a plan for a short trip till Monday. But I got sick in the last few days when I returned from Morocco, and now I'm back home. And we will be streaming on Monday at 3 p.m. Central European time. So make sure to be with us on Monday. And what I will be talking about today, real quick, for this end of the week video. As you know, we have seen non-farm payrolls report coming out better than expected. So that's the reason why dollar is coming up a little bit with the US yields, because obviously there is maybe no rush to cut rates from the Fed if unemployment is still okay. So the US yields are coming to the upside. US dollar is also coming higher, but that higher US dollar could be just a temporary movement. Keep in mind that we are still just consolidating here within the higher degree downtrend. So what's the most important is that that was a free wave rise from that lows. So we know that that was a correction, period. So correction should be fully retraced at some point, meaning that you should expect that market will break these levels. And since this drop is also now maybe only in three lags, I'm just wondering if maybe we really can break 97.90 at the start of next week, and then we start pushing prices higher, or maybe we break this trend line resistance, okay, connected from that May highs, May 12 highs, and then we are going to see retest of the upper side of this range that will make this fourth wave much more complex. Then I would be looking for a triangle. So if we break 99.40, then watch for more complex wave 4, ideally a triangle with the resistance up here. But if we see a sharp reversal to the downside and then a daily close below 97.90, then I'm thinking that we are going straight to the downside here. So bottom line, I'm still bearish on the US dollar, but we are just now seeing some consolidation that can be a bit longer, especially after the latest non-farm payrolls report data. Also, looking at dollar yen, I think the dollar yen will also come to the downside, but now it's just posing. What we see is that was a very nice impulse down from 148.64, and that was a free wave rise. But since this low hasn't been reached yet, I think that 142 for now is a very strong support. But at some point, this support will also be broken. But after this ABCDE triangle that I'm tracking could be completed, so that's when I will be expecting continuation lower. So for now, if we consider that maybe the triangle is one of the valid scenarios, then the first resistance obviously is here at the 61.8%. It's 145 level. So if by the end of the day and the week we will retouch this level and then maybe turn to the downside at the start of the next week, then I will be looking for this triangle to take us more sideways before eventually we will see a breakdown. If we will just keep moving higher here by the end of the week and we see, let's say, a sharp push through this 61.8%, and then we close somewhere about around 145.50, then even flash scenario is also possible. But keep in mind that also still a counter trend movement within downtrend. So higher we go, more stronger can be resistance, and I will be looking for this at some point for this resumption lower, as long as we are trading below that level here, 148.64. Now the final market today will be silver. So looking at silver, as you know, I have been warning in our past webinars for the last month or so that I am expecting that silver will outperform gold. And the main reason was, of course, gold silver ratio. Okay, we have seen very nice recovery in gold silver ratio basically for the last few years. But notice that this, from an Elliott wave perspective, this unfolded in three legs right into the 61.8%. And now we are seeing that prices are rolling over here. And if you look at the past examples, what happened with silver whenever we have seen this major reversal happening on gold silver ratio, well, silver has been doing pretty well. And I'm not surprised that we are seeing now this continuation higher here on silver, especially because from an Elliott wave perspective, we also had a very beautiful setback here on silver down to $28 or so. And that doesn't mean that gold is not in uptrend. It still is. And basically, we are seeing this corrective price action there, which we will cover in Monday's webinar. So again, make sure to subscribe to our channel and you will be notified when webinar will start. So on gold, I'm still bullish, but of course silver can do much better as long we are here trading away from the 61.8%. And as I said, silver itself has a very beautiful pattern. We've been looking and tracking this ABC setback and then sharp reversal to the upside, which was wave one. That was wave two, and looks like that you're now in a wave three. So keep in mind that that's a fifth wave now of a higher degree impulse. So don't get just too excited here at these levels. For some that want to join this trend, it's a bit too late. Okay, especially if you're looking to hold silver for a few months, because maybe in a few months, if not earlier, we will see a completion of this fifth wave, and that's when you should be aware of the complete opposite reaction. Keep in mind that we are already very close to our targets at $36, $37. Of course, this can easily extend even above 38, but we will observing new potential higher targets until we have all of the needed 5 waves up here in place. Okay, traders, thank you very much for this attention on this video. Make sure to be with us on Monday with a lot of more charts and stuff, and I will be covering these charts that I just went through, and of course also a lot of FX markets, and including the S&P 500, maybe even DAX. Traders, have a nice weekend, and don't forget to subscribe and like this video, and make sure to visit us, by the way, on wavetraders.com. You can get 7-day access with this coupon code. Okay, traders, good luck. Bye.